What is going on today, YouTube? And today, this video is going to be a little different. I'm going to talk to you about what my future plan is, what this crazy the stock market is right now, and everything else. So this video is just going to be a little bit telling you what I'm trying to do and how I'm going to do it. So if you haven't been here before, I talk about investing all the time. Just talk about the stock market, I don't really talk about other investments too much because I'm not into them yet. I do fully intend investing in real estate in the future. But as of right now, if you've checked out any of my recent videos, I decided my most important thing to do right now was pay off my debt. And I am still working on that right now. And no, that does not mean I don't have other investments out there, such as like if you have a 401k through your job or something, then yeah, that's different. I'm not saying stop doing that, whatever. But right now, I'm truly focusing on paying off my debt. I finally did it with the student loans. You can check out that video. It'll be linked at the end of the video too. So right now, I finally finished paying off my student loans. That was step number one in me paying off my debt because that was one of the biggest burdens I had over me. I explain it a lot more in that other video. It'll be at the end of the video. The link to that video will be at the end of the video or in the description below of how I paid off my student loans. So with that being said, the second thing I want to do, I won't say this is a dumb move, but at the same time, I didn't know that much back then. And when I graduated college, I'm not saying I spent a lot on a car. I bought an average car that was good on gas, four-wheel drive. Probably cost me around $20,000. Yes, I did have a down payment, but I had in my mind, oh, I have to get a new car. My whole intention of getting the new car is I had it programmed in my head so bad, even from other people saying this and everything else. You can't have a used car because they'll break down. They're more susceptible to breaking down. I just had that beat in my head so much that I thought that was the only route to go. The more and more I'm learning now and looking around, that probably wasn't the smartest thing to do. But anyways, I did it. It's done with. And you can only move on. But future-wise, I probably wouldn't do that again. So I got something reliable because I started my job after college, and I want to make sure I got to my job every day, which is very important. I'm not saying that's not. Used cars these days, it seems like cars last a long time, and if you really don't need a new car, why buy a new car? Because you lose most of your value when you drive that thing off the lot the very first day. But to get off that rant, I am now working on, since I got my student loans paid off, I am now working on paying off that car, and it should be paid off in the next 4 to 5 months because without that student loans, that makes a big difference. That makes a big difference in my cash flow. So if I put all that money that was going to student loans into the car, it gets paid off a lot quicker. And yes, I bought my car. I did not lease my car. So, and with all of this, now back to the stock market. Now, I used to think all the wealthy people in the world, they just put money in the stock market. They didn't think about it for 40 years. Basically woke up after 40 years, looked at it, and they're like, oh, wow, I have that much money in the stock market. And yes, I really do think that does work. I mean, look at our past. So say you invested 40 years ago, no matter what the stock price is now. If you're looking at this for 40 years, that brings you the whole way back to 1977. We're going to zoom in 1977 a little bit. 1977, our price at the stock S&P 500 was, we'll take this bottom here, $87.58. So if you invested continuously for 40 years, especially the money you invested early, 77. So we'll say 1977, I said the stock price was, we're going to go with 87.64, zoom back out, try to match up. We'll go to 85. It's as close as I can get it scrolling on this. Overall, you're up about 3,000%. And yeah, you could take off the little fall we've had lately, but you're still up about 2,900%. And yes, obviously you're not investing it all at once, but if you just continually invested over time, you would have constantly made money. Okay, so now that we got that, understand. That's how I thought all the wealthy got wealthy. It's because they just kept on investing in the stock market, investing. And the more and more and more I learn, yes, that is true. Because that's a huge difference in where they're at now. But especially, and I know I shouldn't care about this, because if you're in for the long term, most likely it's going to be higher. Based on history, it's going to be higher than it was when you first started. But I just keep on thinking, it's such an unpredictable thing in our lives. So why would I pour all of my extra money into the stock market? It just doesn't make sense to me. So yes, I am going to continuously invest in the stock market, but not nearly as much as I planned to when I first started my investing career. I kept thinking to myself, this is falling this much now. No, I don't really care. But at the same time, if I was ready to take out my money, like ready to retire, I might like it might freak me out a little bit. And yeah, it's not like you're going to take out all your money at once and have it all in cash. You'll probably have more in bonds by this point too, because the older you should get, the more you should put your money in bonds so you don't have to worry about these fluctuations like this. But if you're getting ready to retire and you lost 20% over these past couple months, that'd be pretty heartbreaking to me. And there's nothing, absolutely nothing you can do about it. So I don't want to be fully invested in something that I have no control over. I've come to figure that out now. It's not something that works with my psychology, like with me. It's not something that works with me. It could work for you. You don't have to listen to any of this. But I'm looking at other investment strategies, stuff like real estate. And yeah, you can have your argument on that. Like that's not secure either. But in the same way, if I'm looking to rent it out in the future or if I'm looking to buy and hold for years and then sell later, to me, I can control the value of that. That's something I can physically touch. That's something I can physically walk around. That's something I can, it's real. It's real to me. And this stock market, it's not very real to me. Yeah, I know it's businesses. It's just all your businesses put together and it's the assets they make up that makes the stock market keep on going higher and higher and higher. And I completely agree with that. But I have no control unless I am a billionaire investor out there and I buy like over 50% of a publicly traded company. I do not have any say in their day-to-day operations. And that I don't like that. That's how I think, and it's just it's not where I'm willing to put all of my hard-earned money in something I have absolutely no control over. And yeah, people are going to be out there having the argument, yeah, well, you can have control over it because you can buy when it's cheaper and sell when it's higher. No, I don't want to do that. I want to keep buying it, and I'm not going to put as much in as I originally anticipated, but I am going to invest in the stock market because I think it's one of the easiest passive ways to build your wealth. You don't have to do anything, especially if you invest in these index funds. You put it in and forget about it. So, if you have spare time in your life, you want to look at something else. Maybe you should start investing in your own business, or maybe you should start investing in real estate. Figure out something you like to do and actually try to make money off of something you do on the side, besides your job, besides your main source of income. Try to build up a second source of income. For me right now, I'm leaning towards real estate. I like real estate. I've always liked houses. Yes, it's a lot more money, but you need to figure out ways to save money and invest it. And I'm at the point and stage in my investing career where I see I do not want to put all my money into the stock market. I want to have other assets and other things that I can make money off of and not just rely on companies out there that I have no say in their day-to-day operations. So that's a little bit about me and what my plan is for the future. If you enjoyed the video, leave a like on it. If you have any questions or comments, leave it in the comment section below. And if you like videos like this, subscribe to my channel. Or if you just want to see where I go, you want to follow my journey, subscribe to my channel. I will keep on updating you on what I'm doing and how I'm going about doing it. And I will see you in the next video.